Good morning, good afternoon, good evening, and welcome to the Bull versus Bear webinar here. Steve Miley on the call for Trade Day on Thursday, 8th of December. Welcome, everyone. I'm going to kick off by just mentioning again the webinar we did yesterday, James and I, Trade and Mind session. Well received by everyone who was on it, on the webinar live. Thank you very much for all your positive feedback that we had in the chat at the time, in the emails afterwards. Thank you very much for positive reviews that we're seeing on Trustpilot. I'm going to mention, we don't do a lot of promotional stuff in here, guys. You know, I'm trying to give you the value. We're trying to give you real support. We're trying to get you guys to find people who can consistently trade and become professional traders. You know, that's what we set this up for when we started out. I'm obviously looking to make some money along the way, but that's what we've attempted to do. But if you can give us, particularly you guys who come on loyally every day and, enjoy the webinars, you can give us superstar reviews on Trustpilot. That would be very much appreciated. You can find us on Trustpilot. I think you can go to our members site. If you go to the public site, I think you can get to us via the public site, right to our Trustpilot reviews. For those of you who haven't, I see a couple of you left reviews more recently. Where are we down here? There you go, Trustpilot. Okay, so I'm going to click on that. It should take us there now. Yeah. So this is kind of the back end, I think. So you guys don't need all that. This is where I can log in and see the reviews and stuff. But you just need this bit in here, I think. Okay. So I'll put that in the chat, but you can find it there. But if you go to the tradeday.com, it's at the bottom of tradeday.com. Just click Trustpilot. And that would be very much appreciated as ever. And the reason I've got to this is talking about the Trade and Mind. So the Trade and Mind session was very well received. There's a couple of other interviews in here that James and I did. Drink with Traders in here with D. Please do check those out as well. But Trade and Mind was well received. Please do take a look if you get a chance later today. Remember, it's in the drop down here, resources under Trade and Mind sessions. You can see the recording from yesterday's that we redid after. We're not sure if the one on Wednesday, not on Wednesday, on Tuesday went out properly or not. But no matter what, we kind of redid it and probably did it a bit better yesterday anyhow. So there you go. Right, today, calendar-wise, fairly light. It's been fairly light all week. We had that US and global PMI data at the beginning of the week that's kind of been driving the markets lower. And, we've got no Fed speakers to sort of to give us any kind of impetus in here. So markets have been lacking data, kind of lacking direction, just kind of just following that lead from that Monday sell-off. And even though we've had kind of positivity coming out of China with the relaxation of the zero COVID policy from China, which should be a positive for Chinese stocks, Asian stocks, global stocks, the whole reopening. Markets have very, very much been focusing on the negativity of any kind of negative aspect to any piece of data, any kind of recessionary aspect. And then the issue that we have, that strong data is being seen as the negative. The market seems to have got into, even though it's kind of now discounted in, the Fed are going to be kind of less hawkish, as it were. They're shifting away from the 75 basis point going into December. And we've been monitoring that. We've been keeping an eye on the wrong tab. The Fed Watch tool here. This has been sitting around 75-80% on the chance of only a 50 basis point hike at the December meeting next week, compared to the around 25 to 20% chance of a 75 again. So the market, and then also the market is now, it seems to be, going into next year, we're kind of topping out somewhere between either 475, 500 or 500, 525. So it kind of keeps shifting between here, depending on Fed comments, depending on the data, and then peaking out next year somewhere in, look, it's pretty much even Steven in here where the peak's going to be, whether it's going to be the 475, 500, which is obviously up 100 basis points from here. We're currently 375, 400 with pretty much a 50 nailed on for next month. So probably looking for one more hike after that. Or whether we're going to get like a 75 and a 50 and it goes to 500, 525. So the market is kind of fairly even Steven between those two. And you see it, then it's topping out here. And then potentially by the end of the year, then If we move on by November, we're at the peak at 454.75. So that's only 75 basis points. And definitely by the end of next year, 454.75. So coming off a peak, looking for the first rate cut, likely in the last quarter, sort of this time next year, really, or maybe a little bit earlier. So the market's kind of settled around that. That's been where we've been at really for a few weeks now. But, nevertheless, equity markets are kind of up and down, very choppy. We had the huge rally, and just doing a little bit of a recap. We've kind of covered this a lot recently, but, we had the big rally here on the CPI data back here in October and back here in November. And then that big rally last week on Powell, kind of basically reiterating in his speech, yes, we're kind of going 50. And since then, we've given up all of Powell's positivity, and that's just pretty much on nothing. I mean, this has been on not too much data. It was only really the US. We had the jobs report where the market was lower and then back higher. That's that candle there where it was down and up. And then for Monday, we believe had this kind of impetus lower from Monday's US PMI number. That's been the main driver. It's really odd to see something like US PMI driving the market so significantly lower, but it's just on the back of two strong pieces of data, I think, showing the economy is strong and that maybe the Fed continued to become more aggressive in here. So I just put in actually the Trustpilot review. I forgot to click send on that. So the Trustpilot review link is there. And then whilst we're talking about all of that, I just want to share there's this kind of a little bit of a thought piece in here. The worst is yet to come. Macro Matters, they call it. It's a good little series they have in here on Reuters, Macro Matters. So you maybe want to click on that Macro Matters link in here. Actually, what I'm going to do, I'm going to open that in a new tab and just share that separately. So these are kind of good little more like thought pieces. They're not going to help you on a day trade, I can tell you that. Giving you nothing new on a daily basis. But they're more like bigger picture, okay? A little bit bigger picture, looking at markets. And I think this is a good little article, kind of a bit of a recap of where we've been, where we are now with respect to inflation, why it's important, what drove us here. Look, pandemic and war, we know that. I've covered that multiple times in webinars. But yeah, and why inflation matters. What does it mean for 2023? Talking a bit about the Fed. It's only a short article. Take a look at that one. I think it's just interesting. And it's a good little recap of where we are right now and why everything that we're looking at is important. So as I said, going into today, calendar's very, very light in here. Do get CPI data overnight in here, so post the US close. It's actually into tomorrow for China. We've got CPI data out of China. Could be important. I say these kind of pieces of data you wouldn't expect are kind of impacting markets right here, right now. Lagarde has already been on the tapes in here this morning. And there's really nothing of any note coming through in here for the balance of today. 5 things you need to start your day out of Bloomberg. So Twitter, basically maybe they're talking about, changing the loan structure. Nothing's really impacting us. Hong Kong scrap its outdoor mask mandate, shorten isolation period. That's kind of on the back of what's going on in China. This is a little bit of a negative that's impacting markets. Between the EU and China, there's some disagreements in here going to the WTO, World Trade Organization, particularly in here focusing on between Netherlands and China. But that's been a little bit of a story this week, not really aggressively impacting markets. And S&P and US futures in here this morning, going into this morning, are kind of actually slightly up. We've had a slight bounce from the, and it was only slightly down. It was a bit of a non-day yesterday. I wouldn't be surprised it's a relatively quiet day today, but we'll take a look at the charts in here shortly. So US stocks climb. Well, I think climb's a bit aggressive. I mean, they're just slightly up, but European stocks went slightly lower in here overnight. And again, in here, futures edge up ahead of jobs data. So this is just the weekly jobs data they're talking about. This jobs data in here rarely where our initial jobless claims. I mean, I've been in markets over 30 years. That has never been a piece of data. I mean, actually, I'll take that back. It has been a piece of data. During COVID, there was a big focus on that because we wanted to see what was the impact on a weekly basis of COVID. But that weekly jobs data rarely impacts markets. So in here, I think that's a bit of a non-story in here. What else we got? The Federal Reserve is deflating financial bubbles without a crash. It is, so everything's going down. Markets haven't crashed. We've had there have been a lot of people talking about bubbles and bubbles crashing, bubbles popping, and markets crashing for years and years and years and decades. We've had a huge bull market. up until this year. And even with even being pierced by COVID, we soon rebounded, the COVID sell off, and then we rebounded. So we've had a multi-year bull market in stocks. You've had a bull market in bonds, a huge bull market in bonds, as interest rates have stayed very, very low, yields have stayed very, very low, and that has been correcting without a crash in the bond market. Crypto, you would say, has been a bit more harder landing, but that's got its own things going on and doesn't impact broader markets. Housing prices are starting to correct. They're certainly starting to correct in the UK here without crashing. So, are the central banks actually doing what they need to do, deflating these financial market bubbles, particularly in a period of high inflation, without crashing markets? Well, we'll have to wait and see whether we into 2023. But at the moment, they're kind of doing their job, and it looks like we're not going to have a super hard landing. Yeah, yes, we may go into recession. UK probably will go into recession. Parts of Europe will probably go into recession, but not into a really deep, protracted recession at the moment. Okay, things can change, but at the moment, it's not looking like that. And the US maybe even will just avoid recession. It could be painful. We're going to get a slowdown, but you have to do that to slow down inflation. But it could be less painful than previous slowdowns. So so there's kind of the central banks are kind of doing their jobs at the moment. Oil is bumping up a little bit, having been down the last 3-4 days in here. China edges towards reopening. So obviously China reopening, increased production, increased demand, positive for oil, the oil price, and oil bounds from lows on China demand hopes. Again, same thing there from Bloomberg and Reuters. We've already talked about this one on the macro matters. And where are we set going into the day? Well, look, you see European exchanges are hardly changed. We're like 0.3 and 0.2 down on the German DAX and the French CAC. The FTSE, UK FTSE, is pretty much unchanged going into this morning. And if we look overnight on the US, so we were only slightly lower in here yesterday. Dow's kind of flat. 0.2 down on the S&P yesterday, having dropped the few days before that, significantly dropped on Monday through Tuesday, a bit of a non-day yesterday, and any losses we did make yesterday, we kind of recouped already in here today, pretty much up between 0.1 and 0.2, up to nearly 0.25% this morning on the US stock index futures. Right, I'm going to do a quick look at the charts and then we'll wrap. So, we have had this significant sell-off. We focus on this on the Trader Mind session. We're holding right. Remember we looked at the qualification, that a research analyst, like a technical analyst, would look for. So look, not only did we reverse the trend line there back on Tuesday, and then we took out these lows. That's the Powell low. Okay, that low there from Powell, and that's the post. There's the CPI data from November, and that's the post CPI data low there. And you can see we held right there and then held again overnight. So that low there, 39.12.5, then yesterday's low, 39.14, and overnight low, 39.16. So we've held there twice in here. So that did go there, did bounce, and then went there again. So, I mean, as a risk-reward trade, if it breaks these lows, if it breaks that low there, that's the lowest point since the CPI data a month ago, right? We're going to get an acceleration lower. Okay, but for now the market's holding that, and while it's holding, I think it's good for trade location and building a trade around it. So you've had now 1, 2, 3 goes down there. Okay, so potential triple bottom. Okay, triple bottom only completes up through that peak up there, 61.5. Okay, if you want to get in before that, any kind of little dip, I would suggest is a good, there's a get in there. Certainly, if you can afford it, if you can build a trade. Looking for a bigger move. We could get a significant rebound in here today. Okay, back up into here. I do think it could be a bit of a non-day, but for me, it could be that I'm feeling mean reversion day more. Yeah, the market has had. Yeah, if we look since we went down on. So what's the day? I'm getting my days confused. Tuesday. Okay, so if I go back into here. Okay, since Tuesday. Okay, since this low in here. So how long ago is that now? This is so this is my time. Okay, right. Yeah, it's all done off my time. So this is 8 p.m. my time. I've got 7:30 p.m. my time on Tuesday. Okay, on the 12th, on the 6th, excuse me, 12th, on the 6th. Okay, so we're now like 2.5 days away from that, right? Tuesday, Wednesday evening, and then what day and a half? 36 hours. We're over 36 hours away from that. Yeah, 36, maybe 40 hours away from that. So it's had 40 hours the market to break down through that low over there, and it hasn't done it. That's a long time, right? It's a long time. It's plenty of opportunity for the market to break down through there, and hasn't done it, rejected that. So for me, that means the market, my old mentor who taught me, I don't know now, 20 years ago, technical analysis, 20 plus years actually. He used to say to me, if the market, you give the market enough opportunities and it, can't take those opportunities, then it's likely to mean revert. Yeah. And so that's probably what we're going to see in here. The market's had multiple opportunities, 1, 2, 3. Okay. It's had plenty of time. We said, whatever that is, 40 hours. Okay. And it hasn't taken that opportunity. So the chances are now it's going to mean revert and bounce. So I'll be looking for it to at least move to here. And then if you've got a double bottom measure, you measure this distance here, and then you'd measure it up. So you've got from 39.15 to like 39.60 there. That's 45 index points. Okay, so you could project 45 index points up. Okay, so from 39.60, that takes us above 4,000, back up to this kind of consolidation area here we had from a few days ago. So it could easily be back up into that area there today. That's a definite potential. So there's an easier trade to set up there. You can buy right here and put a stop below the low. Remember then to work back. If I want to buy here, my stop's here. How many index points am I going to lose? Well, 45 down. I'm going to want my stop maybe, I don't know, below 12, 10. 35 index points is a big stop. So you're probably going to have to go in with a one lot micro, so depending on what counter you've got, right? You're going to have to be very tight. Or maybe you have your stop in here, or wait for a little dip in here and then look for the next swing. Or you buy the break above the peaks here, or the break above this peak here. So you've got this little peak here, 39.51, the overnight high so far, just recently, 49.5. I think through 39.51, and then probably the stop, then you can trail. So you don't need to stop all the way down here. You could probably put the stop up below these lows, okay? Like at 39.35, or maybe below this low here, below 39.29. Okay, so you've got two options of stops there, and then maybe buying up through 39.51. And then the targets are up at 4,000, right? So then through 39.51, you've got 50 points on the upside, 2 to 1 on that. You've got 25-point stop if you need it. Okay, that's how I would set up a potential trade today. Now, if it takes out the lows, right? And maybe even if it takes out this little uptrend line we've got in here, so we've got this little, built this uptrend line, ideally you draw it through there. It doesn't really work. Maybe you draw it through there, or maybe you draw it through here. You've got this kind of internal trend line through here, so somewhere through there. If it takes out these trend lines, so then again, I'd probably want it to see down through these lows, maybe these little lows around 39.36, down through there, then it all starts to look more negative. And maybe you go short, and then you maybe add to that short, or you wait to see what the price action is like when it breaks that low back from over here, back on the daily chart, the important swing low there, which is at 39.12.5. Okay, so maybe you watch what the, whether it's sticky around there, whether you get an acceleration around there. But if you already sold it through here, then you're in the money. So I kind of a bit binary, but I'm feeling a little bit now, having had this kind of solidity, even though my reports, you'll see I'm still negative, so slightly bigger picture. Remember those reports as well, a little bit written up for more like the swing trader. They're written for banks. Okay, there are institutional reports. They're not directly aimed at trade day. So, for me, I think you're looking going into the day, just on a day trade now, we're rallying right now. I'd be looking long through here, through that peak there. Which, as I say, was where 39.51, right? Yeah, 39.51, which we're getting right there now. I'd be pulling the trigger probably right now as soon as it breaches here. Looking for, and I've had an initial target of 4,000. We discussed this yesterday, trailing stop on that 4,000, and then see what it looks like when it gets up to here. There's a congestion area. It's the double bottom. It's the measure of the triple bottom. Okay, so that's one reason for it to be a target. And then I'd also be looking at the ATR. What's reasonable? Could it get up to 4,000? Can it move up 50 points today? 50 points up today is about a 1 and a bit percent. Okay, it's already up a quarter. Can it move 1.5%? Yeah, sure it can. It's been moving that easily every day. So I'll be looking at there. Okay, let's do similar on the NASDAQ. So the NASDAQ did take out these lows in here, did take out all these supports, but it's only kind of dipped, and again rebounded. And if we look at a similar on the NASDAQ in here, so again, you've got potential 1, 2, 3. You're going to miss 4 down here. This low's a bit higher, but you've got 1, 2, 3 lows down in here. Again, it needs to get back above here. You can see it failed, spike, fail. So up through this level here is going to be important, basically through 11,600. Okay. If you want to get in before, you've got the little peak there, which is where we are right now. So the high there is 558, and we're coming right up to that right now. So up through 558. Would be a quicker entry point up, otherwise up through 12,000. And again, you'd be drawing Similar kind of trend line supports in here, up through here. So this one doesn't work. So you have to redraw out there. That's not the best trend line. So what you really probably do is then move this one. You draw it off of that secondary low there through there. And then really it's just been, if it gets back down through, I'd say support around, 505, 510, 510 to 500. Now through 510 to 500, it looks a little bit more negative. But for now, it's all setting up more positive for me. So a slight bias on the top side, I'm like 65, 35, to be long, but quite happy to flip to short if we get something different going on. I'm going to do a very quick nod to gold and oil, and then we'll wrap. Okay, so starting off with oil. Trying to rebound, big set of down days. You look how oversold we are on the daily chart. Now, daily charts can get more oversold, but look at previously more oversold here. One sec. Oh. So when we're oversold here, you got a decent rebound, after that. Look where we were here on the daily chart. Oversold here, what happened? Rebound. Oversold here, what happened? Rebound. And we're rebounding now. So again, this sits with what we're talking about. Playing that from the long side, potential little bottom pattern going in, decent rally. Ideally you'd wait all the way for up here, but I don't think you do now. I think, it's through the levels. With oil, I'd just be waiting for any kind of dip, looking to buy any kind of dip here on oil. So back to like around 73.00, 73.20. Any dip into there, there's no real upside trigger point for us to get into though. It's all the way up here. And I don't want to wait for up here. So it might just be the next swing higher. Or maybe just take your lead, given you've got the positive correlation with stocks. Stocks start to break the levels we're looking at there. Maybe you go with the long on the break on the you go long on the oil if you're an oil trader, watching the S&P, watching the NASDAQ. If it's taking out the two levels on the top side, the chances are you're going to get the correlation and it's going to go with it as well. My screen is just frozen here, which isn't good. I don't think you can see that pinwheel on your screens. Oh, I've lost you. You can't see me. Oh, no, it's come back. You got it back there, guys, yeah? Okay, hopefully that was you only lost me for a second there, I hope, yeah. So what I'm saying in here is, there's no real upside level here on oil, but I would maybe be looking at the levels we've been looking at, okay? The levels we've been looking at on, given you've got a positive correlation between oil and stocks, as the equity markets break higher, through the levels we just identified, I would probably go with an oil because I don't want to wait for all the way up here on oil, but there's no obvious place to put a buy entry level in here. Maybe the only thing you do is a little fib on this level in here, but we're up through. The only thing you've got in here is there is a little internal trend line. Let me see if I can find that in here. Oh, just bear with me a sec. Oh, where have all my indicators gone? No, it's not going to let me have them. I think this trend line in here that we're already through. Yeah, we are. We're already through this trend line here. All right, let me go take a look at oil. Gold even. So here's gold. Gold nowhere near reacting as much as we've seen on the equity market. So there is a positive correlation between gold and stocks, but at the moment not anywhere near reacting as much. And you can see, having had that significant sell-off in stocks this week, nowhere near as deep a correction on gold. And then we've had a decent rebound and just hovering today, kind of mid-range. So no massive strong view in here, but you hold a gun to my head on gold. I'd say we've got a bit of the underlying pressures are still bullish from this whole rally here. Okay. And then you've had this sell-off, you've had a base built here, and it's created the base up through here, and now the market's kind of oscillating. So it's tentatively bullish, probably buying up through like 1800, certainly adding up through 1803 on gold, potentially looking for it back up towards 1820. However, back down through either 1793, certainly through 1788, gold looking more negative. All right, guys, any questions from anyone? There's a lot of you in the room at the moment. You're always very quiet, though. I guess it's early, particularly if you're in from the US. It's early. Probably just about listening, let alone being able to type anything. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do go check out that trade day, the Trader Mind session. Okay, please do, if you can, go and go onto the members page in here and scroll to the bottom and click on Trustpilot and give us a Trustpilot review if you get a chance. And I'll be back with you with another Bull versus Bear webinar tomorrow for TGI Friday. Take care until then.